Good day, everyone. In behalf of DFC Academy and DFC Authority, I would like to welcome you to today's outreach session on UAE Economic Substance Regulations by Tanuja Paramasivam, Senior Vice President Legal, and Laurie Baker, Vice President Legal and Director of Data Protection. And as attendee, you can listen only. Your mic can't be unmuted. You'll have the opportunity to submit text questions to the presenters by typing your questions into the chat box of your control panel on the right side of your screen. We will be sharing you today's presentation slides after the webinar. If you experience any technical issues, please check your internet connections and refresh your browsers. And now, I'll hand you over to Tanuja and Laurie.
Good morning, everyone. I'm Tanuja Paramasivam. Hope you're all doing well, and thank you so much for joining us on this outreach session. As you know, my name is Tanuja Paramasivam. I'm a Senior Vice President in the DIFC Authority legal team. I'll be joined today with my colleague Laurie Baker, who's Director of Data Protection and Vice President of Legal as well. And we'll be going through various aspects of economic substance for you today. And some of the topics we will be covering are outlined here. So just giving you a quick snapshot of the things that we're going to be covering. And most of the focus for today's session will be on the new filings that need to be made on the MOF portal, which will become live on the first week of December. So that's the key focus of this session today, along with some of the key changes that were made to the economic substance regulations recently back in August. So we have a lot of material to cover today. I'm going to get started with the background. So as you know, the economic substance regulations were enacted on the 30th of April 2019, and that's when they were originally enacted to take effect from the 1st of January 2019. Now, more recently, since 2019, the Ministry of Finance has been in consultation with the OECD and the European Union to make amendments to those economic substance regulations. And as a result, in August, they issued an amended economic substance regulations which repealed and replaced the previous 2019 regulations, and also issued updated guidance and relevant activities guide. As a result of this, all firms that conduct one or more relevant activities must resubmit a further economic substance notification and or an economic substance report, that's if it's applicable to you only, on the Ministry of Finance portal, even if they've already filed a notification with us on the DIFC portals. Okay, now both the notification and the reports going forward will only be filed on the Ministry of Finance portal. They will not be filed on our portal, the DIFC portal at all. And once again, I reiterate, even though you've already filed a notification with us, you will still need to refile a notification on the Ministry of Finance portal. We'll tell you exactly the dates and when and how during these slides. Okay. Now, the first filing deadline for notifications and reports, depending on your reportable period, is 31 December 2020. There will be fines that will apply if that deadline is not met, if it applies to you. Okay. Further information can be found on this, on a communication from MOF, which you should have all received. We will be submitting these presentations to you after the session today. All the links are there, all the information is there, so please feel free to go and check it out. You can also go and visit our webpage on economic substance and the Ministry of Finance webpage on economic substance. It contains a lot of information. The relevant activities guide also has a lot of information that has been updated, so make sure you look at the new version that you can access from our site or directly on the MOF site as well. Okay, so this timeline gives you a quick snapshot of the timelines and timeframes involved in economic substance at this stage. So as I was just saying, although the initial legislation was introduced on the 30th of April, they were effective from the 1st of Jan 2019. All right. Now, most of you have filed an economic substance notification on 30 June on the DIFC portal. Okay. However, post the new economic substance regulations being introduced in August, you are now required, depending on your reportable period, to file a further notification on the MOF portal and possibly also a report on the MOF portal by 31 December 2020. All right, so now we're going to do a little bit more, delve a little bit more into the regulations, and we'll look at who is subject to the regulation and who is in scope. By now, I'm sure all of you know what the 9 relevant activities are, but just in case you'd forgotten, they're all there. I won't go through them. There's a few that we're going to focus on today, mainly just the high-risk IP and the distribution and service center business, because those definitions have changed slightly. The others have all remained the same. But once again, we really encourage you to go and read the relevant activities guide because that contains all the information that you need to figure out whether you fall within one of these relevant activities. If you're still unsure, please go and get independent advice. We cannot tell you whether you fall within one of these categories or not. It is for each entity to determine for themselves. But what we can say is that the entities that are in scope for the purposes of the economic substance regulations are those that conduct one or more relevant activities. So if you don't conduct a relevant activity, you are not in scope and you don't need to file an economic substance notification or return on the MOF portal at all. Okay? And the period for which this applies, as we've said before, is for any financial years commencing on or after 1 January 2019. So the financial year has to commence in 2019. It doesn't include financial year periods that may overlap and finish in 2019. It's anything that commences from 2019 or onwards. Okay. In addition, the regulations have modified the definition of exempted licensees. We will go through them, but if you fall under the definition of exempted licensees, then you are not subject to the regulations. However, you still need to file a notification to confirm that you are an exempted licensee. So in summary, if you conduct a relevant activity and you were in business during the financial year that started from 2019 onwards, then you need to file a notification, regardless of whether you're exempt or not. If you are exempt, or if you didn't earn any income from that relevant activity during those reportable periods, then you do not need to file a report, but you still need to file a notification. The next question is, which DIFC entities are subject to the economic substance regulations? Well, it's all DIFC entities. It doesn't matter about your legal type because they're all licensees that fit within the definition of a licensee under the economic substance regulations. So in our case, private companies, public companies, any of the partnerships, a foundation, an MPIO, or a branch, they all could potentially be a licensee for the purposes of the economic substance regulations. Now, there has been some discussion about whether a foundation would fit within the scope of the regulations or not. Our view is that DIFC foundations are a separate legal entity. They are a body corporate, and technically they would fit in the definition of a licensee, which mentions a jurisdictional person. So it is a legal entity, and we would say that they fall within the definition of licensee. Okay, and we can move on to the next slide. Okay, so who is out of scope? I have touched on this briefly, but the entities that are outside of the scope of the economic substance regulations are only those that are exempted licensees. Okay. Now, the definition of exempted licensees has changed. That's something very important for you to note. If you previously fell under an exemption, that is, you were 51% or more owned by a UAE government, whether that's a federal government or an emirate government like Dubai or Abu Dhabi, Fujairah, Ras Al Khaimah, any of the 7 emirates, under the original version of the economic substance regulations issued in 2019, you would have been exempt. However, that exemption no longer applies. So the definition of exempted licensee has changed, and what it includes are investment funds. It includes entities that are tax resident outside the UAE and are subject to corporate tax outside the UAE. Entities wholly owned by UAE residents or citizens that are not part of a multinational group and only carry out business in the UAE. So that exemption applies where an entity is ultimately owned, either the shareholders or UBOs are all UAE residents or UAE nationals, that the entity is not part of a multinational group, so it doesn't have offices or group entities that are established in another jurisdiction, and it only carries out business in the UAE. It can have clients that are outside the UAE, but its business should only operate within the UAE. So most likely it would not be able to have offices and branches in other locations outside the UAE. Okay, the final exemption under exempted licensee are for UAE branches of a foreign entity that is subject to corporate tax outside the UAE. Now, the definition of corporate tax here is very important. It doesn't include paying VAT or GST. It actually includes where you are subject to paying corporate tax, and you need to provide evidence in your notification that you qualify for this exemption. So, for example, you would need to provide a corporate tax certificate, a corporate tax assessment, or an invoice, for example, showing evidence that you have paid corporate tax. Now, we have had inquiries before about what about double taxation treaties, which would enable the entity not to actually pay tax in another jurisdiction. There is guidance on this in the notification, and basically what it says is that as long as you're subject to the tax, not taking into account the double taxation treaties, then you would fall within that exemption. But if you are not subject to corporate tax at all, regardless of whether there's a double taxation treaty or not, then you would not fall within that definition. I'm not a tax expert and neither is anyone here. We would encourage you to look at all the guidance that's been issued by the Ministry of Finance. You will see links to it in this presentation as well, and particularly the guidance in relation to filing notifications, which talks about this issue in particular. And then if you're still unsure, please do go and get independent advice on it. So now, if you are an exempted licensee, you still need to file a notification on the MOF ESR portal. However, you are not required to file a report or meet the economic substance test. Now, it's very important that if you fall under these exemptions, that you provide supporting documentation to justify or evidence that you fall within these exemptions. Otherwise, you won't be able to benefit from it. Okay, now I'll take you through a summary of the key changes that were made to the economic substance regulations in August. So as we've covered previously, in August, the UAE enacted a new economic substance regulations, which was under Cabinet Resolution 57 of 2020, and issued new guidance under Ministerial Directive 100 of 2020. And it's important for you to note that that guidance includes the new relevant activities guide in Schedule 1 of that guidance. That's where you will find it. Okay, and what this legislation did was it repealed and replaced the previous economic substance regulations, which were enacted in April 2019, and the guidance that was issued, I think, in September 2019. As a result of the amended economic substance regulations, The scope of the entities, the in-scope and out-of-scope entities have changed. There is a revised definition of licensee. However, we do not feel that the change in the definition of licensee has affected DIFC entities, because you were all potentially subject to economic substance regulations before if you conduct relevant activities, and that's still the case now as well. So if you conduct a relevant activity, regardless of what entity type you are subject to the economic substance regulations. The definition of exempted licensee has changed, and we have gone through that. So that is very important to take note of. There has also been clarification in relation to branches, which I will go through shortly. Now, there have also been amendments to the relevant activities of distribution and service centre business, as well as high-risk IP business. We will be taking you through these on a very high-level basis and giving you some examples, but please refer to the relevant activities guide for more information. We will also Laurie will give you an overview of the filing timelines and clarify what needs to be filed when, and what you need to do for those that need to file by 31 December 2020. That is a very important date, and we have to make sure that we meet it and you understand who needs to file by that date. Okay, the general rule is that notifications need to be filed on the MOF portal within 6 months of your financial year end, and reports need to be filed within 12 months on the MOF portal of the end of your financial year end. Now, as you're aware, the MOF portal has not yet gone live, and some entities would have already been required to file their notifications and reports. They have been given a grace period until 31 December. Laurie will take you through this in more detail, but it's extremely important that for those entities, they do file by 31 December, or they will face penalties from the FTA. Okay. The other key change is that the definition of relevant income and some of the other definitions have changed, and I'll give you a quick overview of those as well. The new economic substance regulations also clarify the roles and responsibilities of key authorities and confirm that the UAE Federal Tax Authority has been appointed as the National Assessing Authority. They are the ones that will assess whether an entity has met the economic substance test or not, and will issue the fines. They will do this in a consistent manner across the UAE for all entities. It has also clarified the role of regulatory authorities like the DIFC, as well as the role of the Ministry of Finance as the competent authority who is in charge of economic substance on a UAE level and deals with other jurisdictions around the world in relation to economic substance. There's also been clarification of the administration and information flow, which we will go through later in this presentation as well. Okay, so a very big change that has been made in the new economic substance regulations is the treatment of branches. So there has been a difference in the way that they are treated. Branches now come under an exemption and can also file a single notification if it is a UAE branch of a UAE business. Then they just file one notification in their main jurisdiction, that is in the parent UAE entity's jurisdiction. That's where they file it. So for example, if you have a DD licensed firm that has branches in DIFC, in DMCC, and obviously in, say, it's not so obvious, but say in one of the other free zones, the World Trade Center free zone or Internet City or Media City. Now, in this case, the main entity would be that DD licensed entity. That's the parent entity. That entity can file one notification on behalf of itself and all of its branches, and it needs to report on the activities of all the branches as well as itself on the MOF portal. So only one single notification is required. However, if you are a UAE branch of a foreign business, for example, the main entity is a UK entity that has a branch in the DIFC, then as long as you are subject to corporate tax outside the UAE if the branch is subject to corporate tax in the UK, not including double taxation treaties or anything like that. If it's technically subject to corporate tax in the UK, then it would be exempt and is not subject to economic substance regulations. However, they will still need to file a notification to confirm that. Okay. And then the third treatment of branches is where it's a foreign branch of a UAE business. In this case, they're not required to report on the business of the foreign branch if that foreign branch is subject to corporate tax outside the UAE. If it's not, then it needs to be reported. So if we're giving an example of this is a DIFC licensed firm with a branch in Saudi, for example. In this case, if the branch is in Saudi is subject to corporate tax in Saudi, then it does not need to be reported in the DIFC entity's economic substance return. However, if it's not subject to tax in Saudi, then it will need to be reported and would not be exempt. Okay, now we're going through some of the relevant activities that have changed as a result of the new economic substance regulations. So one of those is the distribution and service center business. This covers two different activities. One is the distribution business and the other is the service center business. But let's go through the distribution business first. Okay, in order to qualify for this relevant activity, all of the following conditions need to be met. First of all, a company needs to purchase raw material or finished products from a foreign group entity and resell it or distribute it in the UAE or outside the UAE. So as long as it purchases raw materials or the finished product from a foreign group company and resells it or distributes it anywhere, then it is subject to the distribution business relevant activity. Okay, now licensees that purchase or distribute goods to third parties only do not engage in distribution business. You can look at this exemption more clearly in the relevant activities guide, and I suggest you read it carefully to see whether you fall under this definition or not. Now, licensees that fall under this relevant activity are not required to demonstrate economic substance if they can prove that the transaction was not in its ordinary course of business. So if it was a one-off transaction that involves purchasing raw materials or finished products from a group entity and resell it or redistribute it anywhere in the world, if that's not its normal business, it was a one-off transaction, then it would be exempt as long as it was charged at cost or less. Okay. Also, the previous requirement that goods needed to be imported or stored in the UAE no longer applies. Okay. I'm just going to take you through a little example of what this definition means. So here we have on the right, up the top, Furniture Distributors Ltd, which is a Lebanese business. This is an example you will find in the relevant activities guide itself. The DIFC entity is the one in the blue box. It's Furniture Distributors Ltd. It is owned by the Lebanese entity. Now, the DIFC entity buys furniture from its parent in Lebanon, and then it sells those products to customers in the UAE, as well as to a group to one of its group entities in Saudi. In this case, this entity would be subject to the distribution and service center business because this is its normal course of business. It's getting finished products from a foreign group entity and reselling those products in the UAE or outside the UAE. Now, if it was only selling it in the UAE, it would still be subject to this definition. And similarly, if it was only reselling it to related entities outside the UAE, it would still be subject to this definition, whether they're related or not related. As long as they're reselling it or redistributing it anywhere, then they would be subject to this definition, as long as it was not a one-off purchase. Okay, so that's that example. Now we're going to look at the service center business. Now, the service center business is very broad scope. It includes consulting businesses, it includes administrative type businesses and other services. It does include within its scope firms like law firms, accounting firms, potentially corporate service providers, anyone that really provides services or consulting of an administrative or other nature. Please look at the relevant activities guide to see whether your business falls within this definition. Now, this requirement requires the entity to provide services to a foreign group entity and to get some revenue from those services it provides to a foreign group entity. The previous requirement for a connection with the business outside the UAE has been removed. Now, if you're only caught by this definition if it is part of your ordinary business. So again, if it's a one-off transaction, it would not be caught. If you're providing services to third parties only and not through or via a group entity, you are also outside the scope of this relevant activity. Okay, these are things to keep in mind. So technically, if you're a law firm and the DIFC branch of this US law firm is working on a deal that the US law firm is billing for, and they have members of the DIFC branch working on this transaction. Once the transaction is done, the US main office bills its client for the work of the DIFC lawyers as well as their own lawyers. And then later on, once it gets that revenue, gives it back to the DIFC entity. That would be considered service center business and fall within this definition because that is their normal business. It's not a one-off transaction. However, I'm going to take you through another example which would fall outside of this definition. So in this example, we have ABC Group Ltd, which is a US company. It's a group company. It has a branch in the DIFC which just provides HR services, okay? And it provides that HR services to a group entity in Kuwait. Now, in this situation, it would be considered a service center business. Even though the services are provided at cost, because the DIFC entity's business, normal business, is HR, and it's not a one-off transaction. So in this case, this would be considered a service center business. Okay, now we have another example here where we have the parent entity is ABC Audit Group in the UK. And it has a DIFC branch, which is called ABC Audit Ltd in DIFC. It also has a branch in Saudi, which is also called ABC Audit LLC. Very original names here. All right. Now, what's happening in this scenario is that the Saudi branch has a very small office and doesn't have many support staff. So the DIFC branch, which is a much bigger branch, is providing temporary IT support to ABC Audit in Saudi for a short period of time while they have an upgrade. In this case, it would not be considered a service center business because one, it's a one-off transaction. It's not the main business of ABC Audit Ltd is not to provide IT services. Its main business is to provide audit services. So for both those reasons, given that it's a one-off transaction and it's not its normal business, it would be considered not a service center business and would not fall under the definition of the service center business relevant activity. Okay, now there have been a few changes to the high-risk IP relevant activity as well. As you already know, those who fall within the definition of high-risk IP business are subject to increased substance requirements, right? This applies if you meet all of the following 3 criteria, okay? If the entity did not create the IP asset itself, and it acquired that asset from a connected person, so from another group entity, whether that group entity is in the UAE or outside the UAE, or it acquired that asset for consideration by providing some money or something in return for R&D that was done by someone outside the UAE. That someone could be another group entity, or it could just be a scientist in some university in US or Canada or wherever it is, it doesn't matter. But they gave some consideration for that person conducting the R&D and developing that IP for them. Okay. Now, the third component is that the entity licenses or sells that IP to another group entity, or it earns separately identifiable income from a group entity outside the UAE in relation to the exploitation of the IP asset. Okay, so it's 3 components there. The entity did not create the IP asset, it either purchased it from another group entity, whether that group entity is in the UAE or outside the UAE, or it provided funding or some sort of consideration for someone else, maybe a university or some other firm, to develop the R&D outside the UAE and generate this IP and then acquired it. Okay, and then it licenses or sells that IP to a group entity or earns income that it can separately identify from a foreign group company, okay, for exploiting that IP asset. So let's go through an example because there are quite a few moving parts for this one. Now, in this case, we have the blue entity is Pharma Holding Ltd. It's a DIFC entity. This actual example is there in the relevant activities guide as well. So we really, really do encourage you to go ahead and read that relevant activities guide to make sure whether you fall within these definitions or not. So the DIFC entity, Pharma Holding Ltd, has acquired a patent from its UK group entity called Pharma R&D Ltd. It paid money to Pharma to acquire this patent. Now it licenses this patent to a group entity in Egypt called Pharma LLC and receives money for that. In this case, it is considered to be a high-risk IP business, and as a result of that, it is deemed to have failed the economic substance test and would need to provide evidence to substantiate that it has sufficient economic substance in the UAE at a higher level than normally applies in order to refute the failure of that, the failure of the economic substance test. Okay, so they need to provide a business case as to why the IP asset should be held in the UAE. It needs to provide the experience of its employees here in the UAE, show that they're qualified enough to manage the operations. It needs to meet a lot more substance in order to prove or refute the assumption that they have failed the test. Okay. The other changes that were made to the economic substance regulations were in terms of definitions. So first of all, the definition of licensee has changed. It includes a juridical or jurisdictional person, which is any legal person incorporated in the UAE or elsewhere, or an unincorporated partnership. We believe that this definition includes all DIFC entities, so all companies, partnerships, because we have unincorporated partnerships like general partnerships and limited partnerships to an extent, as well as incorporated partnerships like limited liability partnerships. It would include an NPIO, which is a non-profit incorporated organization, which by its definition is incorporated and a separate legal entity, and will also include a foundation because that is also a separate legal entity and a body corporate. The definition of relevant income has changed. It means all gross income from a relevant activity that is recorded on the books of the licensee or exempted licensee under applicable accounting standards. The definition of gross income is also provided and is defined in the guidance, not in the economic substance regulations themselves, as all income from whatever source, including revenue from sales and inventory and properties, services, royalties, interest, premiums, dividends, without deducting any types of costs or expenditure. So it's a very, very broad definition, but it excludes taxable or accounting income or profit. Please go and review the legislation and the guidance to make sure that you're clear on these terms. A connected person has been defined to mean an entity that is part of the same group as the licensee or the exempted licensee. In addition, group has been clarified to mean two or more entities related through ownership or control that are required to prepare consolidated financial statements for financial reporting purposes under applicable accounting standards. Okay. And then that's the end of my section. I think I might take some questions in relation to this component, and then I will hand it over to Laurie Baker, who will talk about the impact of the changes and the timelines and the consequences for not doing what you're meant to be doing.
Okay, thank you so much, Tanuja, for the session, for the slides you covered. As part of, in terms of the questions, I think we're receiving a lot of questions relating to if their activity can be classified as a relevant activity. I think you've already previously mentioned this as well. As DIFC, we cannot confirm that, and you'll need to refer the laws and the regs, or you'll have to take additional guidance from external parties to confirm that. Unfortunately, the IFC will not be able to provide any guidance relating to that or be able to confirm any such informations. So starting with the first set of questions, our first question mainly relates to whether NPIO can be classified under ESR or not.
This is a good question because technically an NPIO falls under the definition of a licensee, but it's not really meant to conduct any activities in the DIFC. So really it shouldn't be subject to the relevant activities, but it is capable of being subject to the relevant activities guide. It depends on the activities that the NPIO does. Most likely it would not conduct a relevant activity, but you do need to look at the definitions and see whether any of them are applicable. But in most cases, it would not apply. And in which case, if it doesn't apply, meaning that you don't conduct a relevant activity, then you are not required to file any notification or report on the MOF portal. The other thing I should also let you know is that by now, all those entities, based on the notifications that they filed with us back in June, we have already sent back separate communication to those entities based on their reportable period, letting them know that based on their filing with us, whether they need to file a notification or a report on the MOF portal by 31 December. Now, that is just based on the filing that you made with us in June. If things have changed, then you will need to assess that for yourself. But we're just giving you a heads up that based on the filing, that the notification you filed with us back in June, we have informed the firms that may be subject to economic substance and would then therefore need to file a notification or a report on the MOF portal.
Okay, thank you so much for the detailed response. The next question mainly relates to rep offices. So we've got a couple of questions where entities are asking us, are rep offices supposed to file? And what if, because previously if they were not coming under the exempted criteria due to which they had filed with us, so if they fall within the exempted criteria, should they file with the MOF or not?
So the rule is, if you conduct a relevant activity, regardless of whether you're a branch or regardless of whether you're exempt, you all need to file a notification, because it's only by filing that notification are you confirming that you're exempt. If you don't file a notification, you are subject to fine and you're assumed to be conducting a relevant activity. So please file a notification if you conduct a relevant activity, regardless of whether or not you're exempt. it's extremely important for those entities that are exempt, because that confirms that you're exempt and you have to provide evidence of that. Now, rep offices are all branches. We've gone through and done the exercise. So if you're a branch and you're subject to corporate tax in a jurisdiction outside the UAE, you are exempt from meeting the economic substance test. So, and you would fall under the exemptions. So file the notification, provide supporting documentations to justify that exemption, and you will not need to file a report.
Okay, I think that provides good response to the questions we've received relating to rep offices. Our next question mainly relates to branches as well, wherein entities want some clarity if do they need to file or not, if they're a pure cost basis, in the sense the branch is not earning any income as such, and just they're more on a cost model. So would these entities have to file?
So there doesn't seem to be any exemption for whether it's cost or not cost. Look at the relevant activities. Obviously, you saw with the distribution and service center business, they were talking about whether it's cost or less. You may be exempt in certain circumstances if it's a one-off transaction. So if you fall within those exemptions or you fall outside the definition on those bases, then that is something for you to consider, but please review the relevant activities guide, see whether you fall within the definition or not. But under the legislation itself, it doesn't really matter whether it's at cost or not. It's just whether you earn a relevant income. And we've been through the definition of relevant income. So look at that carefully. If you earn a relevant income and based on the relevant activities guide, if you fall within the definition, you need to file notification and a report if you're not exempt.
Okay. The next one is a very interesting one because it states that if they have two licenses and one certificate of incorporation, so it's more of an additional license, do they have to file separate ESRs or do they have to file a single ESR?
So it's a single filing for notifications and reports per entity, okay? It doesn't matter how many relevant activities you conduct. It's one notification and one report per entity. The only exemption to this is where you are a UAE branch of a UAE entity, where only one notification and report will be filed for the whole group because they're all UAE main entity and UAE branches. The main UAE entity will file on behalf of all of its branches as well.
How about investment holding company and investment funds? Do you want to throw some light on that?
Meaning what specifically?
In the sense, they're asking whether they are supposed to file. I think the response remains the same, right? That if you're conducting a relevant activity, you have to file. And for that, you have to go back and check the guidance and the laws and regs that have been issued for you to verify that.
Yes, just one more thing on that point. So as you know, the investment funds or investment entities fall under the exemption. So please look at the relevant activities guide and the legislation. If you fall under that exemption, you still need to file a notification, but you wouldn't need to file a report.
Okay. Now on the documents that are actually requested, I think as per the guidance, it says that they have to upload their financial statements. Do they have to upload the audited financial statements or do financial statements work?
So if you have audited financial statements, please upload those. If you don't have audited financial statements, please upload whatever financial statements you do have. Please note that all DIC entities are required to keep and maintain accounting records. They don't all need to file it with the registrar and they don't all need to have them audited, but everyone is meant to have accounting records and those will need to be attached in the report only, I think.
Just to add to Tanuja's point, it's very important that you upload the signed version and not draft versions, please. That would be great. Our next question, which mainly relates to that, the board members are required to be physically present in the UAE when taking strategic decisions. We've got a question where they want us to clarify what strategic decisions are because it's not mentioned in the guidance.
Strategic decisions are mentioned in the legislation, so have a look at it. It's any decision. It's decisions relating to the core income generating activities. It's decisions that are important for the running of that business. So have a look. There is a little bit of an analysis of it. Now, the Ministry of Finance has issued on its website some information in relation to COVID-19 and the requirement in relation to being directed and managed in the UAE and having meetings in the UAE during the COVID period where traveling is restricted. So they will take that into consideration. They have issued communication and guidance in relation to that. So please refer to that. But at the end of the day, it is for the FTA, the Federal Tax Authority. They are the National Assessing Authority. They will apply these regulations across the board for all UAE entities.
I think we are receiving a couple of questions now where it's where they're mentioning that small private companies are not supposed to file audited financial statements. However, as Tanu just previously clarified as well, you're still supposed to file your financial statements. So in case you do not have audited ones, you will have to upload your financial statements. We're receiving a couple more questions. What I'll do relating to reportable period, what we can do is that we can have Laurie go through that, and if you still have these questions, please do ask them back. Until then, I'll go ahead and consolidate the remaining questions as well. Thank you so much, Tanuja, for clarifying them.
So then I'll pass
Great.
you on to Laurie Baker now, who will continue with the presentation.
Great. Thank you so much, Tanuja, and thank you, Khushbu. Right, so you've heard about the updates and some of the major changes amongst entity types and definitions of relevant activities and so on. Now we're going to talk about the impact of those changes. So we have received clarification on the roles and responsibilities of all of the entities involved in the ESR process. The definitions and responsibilities under certain authorities have been expanded somewhat, and certain concepts and requirements have been added. So you see here you have licensees, that's the entities in the DIFC that have been licensed to actually conduct business in the DIFC. So they're to submit timely and accurate ESR notifications and ESR reports on the MOF portal and with relevant supporting documentation. These are key actually, because the portal is what you're supposed to use that's been provided from the MOF to provide your re-notifications, let's say, and all of your notifications going forward, and also to submit your reports. So it's not the DIFC client portal, it is the MOF portal. And then you're also supposed to, as an entity, respond to information requests from the regulatory authorities, of which there are 3. Regulatory authorities, for example, are the DIFC ROC or the regulators in the similar sort of free zone jurisdictions. It's designated here, the ROC, as the regulatory authority. So we are meant to, or the ROC's office is meant to verify information submitted by DIFC entities in the notification and report, ensure exemptions are properly applied, and assist the FTA in its roles. So the FTA is the National Assessing Authority, that's the federal tax authority. It assesses the ESR reports, it determines if the licensee has met the economic substance test, issues administrative penalties for noncompliance, hears and decides on appeals around any sort of penalties or directions given, and sharing information with the MOF. And then the competent authority is the Ministry of Finance. So this issues decisions to implement the ESR like you are hearing about now, basically updates around guidance, around the regulations themselves, any changes and things like that. They're developing the ESR portal. As I mentioned, the Ministry of Finance portal is where you file everything going forward. And they also engage in exchange of information with competent, foreign competent authorities, so similar authorities in other jurisdictions as well. So if economic substance test has not been met, or there's high risk IP that hasn't been reported, or what have you as an activity, these may be some of the things that the foreign competent authority will hear about from the Ministry of Finance. Okay. So if you can go ahead, yep. Okay, so what do DIFC licensees need to do? And we've tried to break it down into something a little bit more manageable by setting it out the way that we've done it here, because there's a lot of dates and a lot of information to remember. Just first and foremost, the general rule for 2020 reportable period submissions going forward. Okay, so these are not the ones that you've already submitted if you've submitted. These are going forward according to the changes. Notifications must be filed on the MOF portal within 6 months of the financial year end, and reports, ESR reports, must be filed on the MOF portal within 12 months of the financial year end. Okay, so that's going forward. We also have to deal with resubmissions for reportable period submissions that cover the 2019 reportable period. Okay, so all DIFC entities that conducted a relevant activity, including exempted entities, are expected to register on the MOF portal and resubmit their ESR notification. Okay, DIFC entities that conduct a relevant activity with a financial year ending 30th June 2020 will need to file a notification by 31st December 2020, even if you're exempt. DIFC entities that conducted a relevant activity and earned income during the reportable period ending on or before the 31st of December 2019 are also required to file an ESR report by December 31st, 2020, unless it's an exempted licensee. And again, Tanuja has given you the update on that and how to make that determination. DIFC branches with a UAE parent or head office should not file. The UAE parent or head office must file the notifications and reports, if applicable, for itself in all branches. And that if applicable in brackets, it corresponds to the reports, right? Not the notifications, because as we said above, you resubmit your notification. And then the MOF ESR portal is expected to be ready first week of December. The portal itself, you can go to and actually register, but the ESR portion of the portal will be live sometime during the first week of December, so midweek next week to within the week following. Okay, so hopefully that's pretty straightforward. You can see these slides. This is all set out on our ESR website as well. I mean, most of that was taken word for word from there. So if you do have any questions about ESR, FAQs are available, and extensive details and information are available on our website. So what we're talking about here, though, when you're making these assessments about what to file when and at what point, you have to consider these three key considerations: your relevant activities, any exemptions, and the reportable period in which you're meant to report. So also, please note that these deadlines, definitions, guidance, and regulations are set by Ministry of Finance, not by DIFC, not by any authority really that has to implement any of these requirements. All of the free zones are subject to this. It's not something that we can change. You can't necessarily go to another free zone and sort of say, well, maybe they'll do it differently in Jebel Ali or ADGM or wherever else. It's going to be the same all across the board. So we're all in the same boat here. We can't change anything. We can't change the deadlines. We get our instructions from the Ministry of Finance and we implement them and communicate that information to you. Also bear in mind too that the Ministry of Finance portal is, again, not DIFC's portal or any other regulator's portal or free zones portal. Questions for that portal use should go to ideally the Ministry of Finance, but we'll communicate that information to you as well when we know exactly how you should ask those questions. Okay, so I'm going to just run through quickly because I realize we're running out of time. Just a few examples of the reportable periods that we were talking about, right? So you've got in example 1 here, an existing company with a 1st of January to 31st December financial year. We're talking what's already been done by any of the entities in this situation, let's say. So you've got your 1st January, 31st December financial year. Your reportable period under the regulations is that year, right? 1st January 2019 to December 31st, 2019. You will have filed a notification, hopefully as at 30 June 2020. You are required now to resubmit your notification on the MOF portal by 31st December 2020, and you submit a report on the MOF portal as well, unless there's any sort of exemption applicable, okay? So if we move to the next example, example 2 will show you an existing company with, for example, a 1st April to 31st March financial year, right? So you look at the beginning there, that 1st April to 31st March time span, because even though it went into the first 3 months of the year in 2019 and the regulations actually were active from January 2019, they didn't actually become sort of reportable or applicable to you in terms of your reportable period until 1st April 2019. So that's where you start looking at your reportable period from. Everything started from 1st April 2019. So if you have again a date after that, for example, that's where your reportable period will start. It ends 31st March 2020. You will still again have filed a notification with DIFC as of 30th June 2020. There's a technical deadline in there that we mentioned that if you read through the guidance and notices provided by the Ministry of Finance, technically they wanted a new notification submitted on their portal as at 30 September 2020. And we're mentioning it here because for this scenario it would have applied, but they are not actually requiring that. Again, the date is 31st December 2020 for the resubmission of your notification on the MOF portal. But for your report, where required, you have until 31st March 2021, because again, if you recall, it's 12 months to submit your report from the end of your financial year. Okay, so that's how that breaks down. Again, you can read through this and process through when we provide the slides and any feedback. Again, it's also on our website, so hopefully you can access whatever we're telling you here fairly easily. Okay, and then the next steps in filing on the MOF portal. Okay, so the last date to resubmit notifications and submit reports where required, and again, for relevant reportable periods, this is what it applies to, is December 31st, 2020. And again, that has to do with the timelines that I just showed you. So if your financial year ended December 31st, 2019, that's why you would also have a report due December 31st, 2020. If you went beyond that, like March 31st, 2020 as your final reportable period end date, for just as an example, then it would be due in March. But for those of you who have reportable periods that end December 31st, 2020, you need to also submit a report if you're not exempt. Create an MOF portal account. As I said, you can use that link that's provided in that slide. It's a hyperlink. It'll take you to the portal. You can do that already. Submit your ESR notification. So you have guidance and information there in those links as well. There's hyperlinks about submitting your notification on the MOF portal. And then you submit your report if you're required to by that date, the 31st of December. And this is just to give you an idea of what the MOF portal sort of looks like, how you're going to be logging in. So you have your account, you can create a new account. It's pretty standard. We all do that, you know, quite often these days. Then you get a licensee dashboard and provides you sort of information as to what your status is, what, you know, what you filed, what you haven't. And then you have a main page that shows you all of your actions with the Ministry of Finance. Okay. Consequences of noncompliance. Again, I'm going to try and be brief here. If you fail to resubmit your notification and supporting documents via MOF portal on December 31st, 2020, it's a penalty of 20,000 dirhams. If you fail to submit economic substance report and supporting documents by, again, December 31st, 2020, where required, it's a penalty of 50,000 dirhams. If you fail to demonstrate sufficient economic substance in the UAE for each relevant financial year, it's a penalty of 50,000 dirhams. And the second consecutive year of failure, the penalty is 400,000 dirhams, and your commercial license could be suspended, withdrawn, or not renewed. And again, if you provide inaccurate information in any of your reporting or notifications, you are subject to a penalty of 50,000 dirhams. Okay, so where an entity has not met the economic substance test for a financial year, or where an entity derives income from the IP assets considered as high risk, as part of the IP business relevant activity, the MOF also shall provide the relevant information about such entity to the foreign competent authority, as I mentioned earlier, of the country or territory in which the parent or ultimate parent company and the UBO of the entity resides. That's under ESR Article 11, so you've been warned there may be exchange of information with your home territory as well. Okay, and now we're back to some Q&A. Again, I realize it's 11 on the nose, so we probably will only take a few questions, I think. Yeah, Khushbu, over to you.
Okay. Thank you so much, Laurie. We have certain questions where they're asking that is it mandatory for you to conduct board meetings? As per the ESR laws and regs, it is mandatory, and we request you to conduct that. I think there was one question about physical meetings, especially due to COVID. Laurie or Tanuja, one of you, do you want to answer on that one?
Sure, I'll take that one. This is Tanuja. I would suggest that you look at the notification published by Ministry of Finance on their webpage for economic substance about COVID-19. Read through it. They have said that they will take COVID into consideration for this year. So just see how that would affect your business. But normally you are meant to show that if you meet only, if you conduct a relevant activity, you earn income from it, you're not exempt, then you need to file a report. It's only at that report stage that you have to demonstrate economic substance and that it's been directed and managed and all of that. That's when it becomes applicable. So read that note from the ministry and see what you need to do. But going forward, it is a requirement to hold meetings. Whatever, they don't specify the number. It depends on your business as to what is appropriate and relevant to your business.
Thank you so much for that, Tanuja. Are entities under liquidation supposed to file or that are currently pending dissolution?
Yes, all entities that currently exist, regardless of whether they are pending dissolution or not, do need to file. Only entities that have already been dissolved don't need to file. So you need to file a notification if you conduct a relevant activity during a reportable period that you need to report on. So after 2019, if you're still conducting a relevant activity, and then you would need to file a notification and then a report only if you've earned income from that relevant activity.
Okay. I think we're again receiving a lot of questions relating to are they exempt or not. So I think Tanuja and Laurie both have mentioned as well. If you're conducting a relevant activity, you need to file. If you're not conducting a relevant activity, you do not need to file. I think Laurie has already mentioned about the reportable period, which should give you additional guidance on that. We have one question where someone wants an explanation relating to lease finance, because now it's been divided into two different categories. That is lease finance business leasing and lease finance business financing. Would you be able to explain that a bit more?
I would suggest when we don't have time in this session to go through it, but please look at the relevant activities guide. It does break it down. It gives examples of the different types of businesses that fall under the lease business and the financing business. So go through it, check it. That gives you accurate information based on which the Federal Tax Authority will be assessing substance. If you are still confused, then or need further clarification or would like to test it out with someone, please get external advice.
Okay, I'll take the last question because I think we are already 11:04. Are the supporting documents clearly mentioned and defined? Yes, they are clearly mentioned as part of the guidance, and you can also see them as part of the templates that have been sent across where it clearly states the documents. The guidance has way more information, so we would request you to refer back to the guidance. The templates, naturally, once they go live by the first week of December, you'll be able to see them live. I can see we do have a couple more questions. What we can do is that if I feel they've not been answered, I'll add them by the end of the presentation, which should be sent across to you. Thank you so much, everyone, for attending this session. If you have any further questions, you can drop us an email at info@difc.ae or give us a call at 0436222222. However, as mentioned, we'll not be able to provide you any guidance relating to whether you conduct a relevant activity or not. And if you're conducting a relevant activity, you have to file. So I hope that clarifies. Thank you so much.